Will Bitcoin rally after the correction? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Now, an unprecedented promotion is underway. By depositing $100 and completing the KYC process, you will immediately receive a Bitcoin contract position worth $1,000. What are the steps? Click the link below to access the interface. Complete the KYC process and deposit $100. Then, you will instantly receive the gift of a $1,000 position, in which you can choose to go long or short on Bitcoin. You just have to deposit $100 for it. If you choose a long position, and Bitcoin rises by 10%, you'll have already doubled your investment. You can turn Bitcoin into cash directly. Feel free to click the link below to take advantage of this unprecedented offer. Now, let's turn our attention back to the Bitcoin market. From the daily chart, you can observe that the MACD is gradually converging. We can observe the MACD histogram bars. After the decline, the red bars increased initially, and the deviation between the MACD and signal lines is also growing. However, you'll notice that the bars are now turning lighter red, suggesting a decreasing deviation. When the two lines converge and cross through the baseline, a golden cross will form, which can effectively resolve the previous bearish divergence. What we need to watch for is whether this golden cross will lead to a higher peak. Now, let's focus on the volume aspect. In my opinion, for this current wave, we must see a substantial increase in volume during the breakout. If you observe, initially, the volume was at this level during the previous breakout. Then, during the second upward movement, the volume was at this level. However, when the price encountered support and attempted to move upward again, the volume was at this level. Therefore, the overall trend of volume has been declining. Although it's slowly declining, there's no denying that it's heading downward. That's in terms of volume. However, in terms of price, it's moving upward. This creates a divergence between price and volume. In a healthy upward trend, we would expect both price and volume to increase together. But currently, we're witnessing the opposite, where the price is rising, while volume is gradually diminishing. Therefore, if there is a potential for another bullish trend ahead, we should look for an increase in bullish volume to confirm it. Now let's focus on the upper range. Is it distribution or consolidation? We need to start by considering the unfavorable scenario. If it turns out to be a distribution phase this time, are there any missing conditions? The market has spent 59 days in the upper range, with a trading volume of 836,000 bitcoins. Let's take a look. The entire accumulation range is located below this point. Alright. When it was in a downtrend, the range lasted for 64 days and had a volume of 1.8 million. Although the number of days is the same, there is a significant difference in volume. Even the volume generated in the upper range is merely a fraction of the volume in the lower range. Therefore, if this range is indeed a potential top or distribution area, it will last longer. I'm not sure how long it will last, but the volume at least needs to be equivalent, preferably around 156 million. Considering this, it's plausible that the upper range could be a distribution phase. So, if the market is to enter a distribution phase, it still needs time and accumulation in volume in the upper range for the price to go downward. Personally, I believe that if the price continues to consolidate without breaking out, even if it doesn't experience a significant decline, it will gradually deplete the possibility of a bullish outcome. In other words, time is currently favoring the bearish side. If the bulls fail to move upward during this period, it would be highly unfavorable for them. Therefore, I'm paying close attention to the current market conditions. If there is a breakout, I believe it will likely occur soon. Now, let's compare it with the previous cycle. After the end of the last small bull run, what do we observe? We notice that the distribution phase at the top lasted for a significant period and involved prolonged consolidation. Now, is the price in this box pattern? Okay, let's check. If the current range satisfies the conditions as a potential distribution phase, in the upper range, it spent 94 days with a volume of 1.7 million. What about the lower range? It's 1.7 million in 94 days in the upper region. Now, in the lower range, let's start from this point. So how does it compare? Okay, it's around 132 days. A longer duration. But in terms of volume, okay, you can see. It's around 1.546 million. There isn't a significant disparity compared to the upper range. At the very least, the volume required in the upper box should be similar to that in the lower region. Then only do we consider the possibility of this range becoming the potential distribution phase at the top of the small bull run. Based on the current market situation, it appears that we still lack some time. Let's take the previous small bull run as an example, which was perfectly aligned. Even though it had fewer days spent at the top, the volume was still sufficient. Looking at the current scenario, here, the volume hasn't caught up yet. The number of days is gradually becoming similar to the previous phase, but the volume hasn't matched. If the price continues oscillating here for an extended period, it will increasingly disadvantage the bulls. Let's assess the situation for the bulls. There isn't any significant buying volume, which is also unfavorable. Let's examine the head and shoulders pattern. Here, we have a beautiful head and shoulders formation. Let's outline it. This is the left shoulder. This is the head. And this is the right shoulder. Although there was a breakdown below the pattern, with a long lower shadow, it quickly bounced back, reaching the neckline, which is quite a resistance. It is not ideal for the bulls. However, if the price manages to reclaim the neckline and stabilize above this white line, let's change it to white. It looks better. Stay above the white line. At least. It's fine if there are no pullbacks, but it at least has to stay on this white neckline. Then, I would consider it a more favorable direction for the bulls. As long as the price remains below the white neckline, it will be less advantageous for the bulls, especially since there hasn't been a surge in volume after the uptrend. The volume remains subdued. Let's take another look. If this entire correction we've been experiencing since the previous all-time high is a correction, that will be followed by a significant bullish trend. For example, the section here. It was a major bullish trend. The same goes for this one. If we do have another one after this correction, then the best entry point, or the safest and most confirmed entry point, would be when the price breaks above this white line. Entering the market at the breakout would be the optimal and safest approach. Although you may think that the price has already moved up significantly, but if it can truly establish a new trend, then sacrificing a portion of the gains for the sake of safety is definitely worthwhile and rewarding. Alright, let's zoom out the chart. To this extent, you'll notice that we've seen a rising wave 1, followed by wave 2, and then wave 3. This wave 4, in my opinion, is still in progress. It's still unfolding. Unless we witness a strong upward surge soon, we can conclude that the wave 4 correction is not yet complete. However, there's something interesting to observe here. The magnitude of the corrections in wave 1 and 4 are completely different from their corresponding price movements. This is discussed in the Elliott wave principle. It explains that if wave 2 is relatively simple, wave 4 tends to be more complex, and vice versa. Therefore, we can estimate the complexity of wave 4 by looking at the complexity of wave 2, as they tend to exhibit an inverse relationship. So, when wave 2 moves in a simpler manner, wave 4 tends to be more complex. Currently, it's evident that it's experiencing a more complex wave. We need to wait for this wave to complete before we can seize the highly anticipated wave 5 upward movement. At the moment, I don't believe we can confirm that wave 4 has finished. We aren't sure if wave 4 is finished. It's yet to be confirmed. We still need to see strong volume and bullish behavior. However, we haven't witnessed such signs yet, so I'm still waiting for confirmation. Let's switch to a smaller time frame. It seems that the price appeared to stabilize yesterday, but then it retraced. So, it's best to give it some more time. However, it does seem weaker now. Slightly weaker than before. If it continues to weaken, and if you already have a long position, it's advisable to consider reducing it appropriately. If it really continues to weaken, and the time of oscillation extends, it's not a good sign. It's a danger sign, indeed. Now let's look at Ethereum. For Ethereum, the most crucial level is here, in my opinion. Until the price stabilizes above this level, Ethereum is indeed in a precarious state. It's not stable. As you can see, this level has served as both resistance and support. multiple times in the past. At present, there's an interchange between support and resistance. I believe this line is truly critical for Ethereum. It's extremely critical. The price must reach above it. And until it does, I consider the market conditions less favorable for the bulls and their entry positions. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.